Good morning, guys. We do not have anyone online, but notwithstanding, I'm creating the video and I'll drop the link as usual. But no one online, so I might not be able to attend to direct questions. I wanted to teach us something really powerful this morning, but no one is online, so I would just explain something. And we're not fully ready for that yet. I skipped some parts. So since today is Saturday, I'm just doing analysis. I'll be showing us something. I'll be revealing something small to us. Okay, I believe you can all see my screen now. This is Ethereum USD chart. Ethereum USD chart. I made this analysis some days ago. I drew this stuff some days ago. You can see what happened here. You can see look at what happened here. Like I've always been telling us, this is a support zone. This is a support zone, this area. I'm just doing random analysis now. This is a support zone. And see this market came here with a rush down. It went back up, came to that same point. Here was on 21st, on 19th rather. This was on 23rd. It came back to that same point on the 22nd of another month, a month after. Returned back on 26th. Then on the 20th, obviously, I would have picked a trade here. Why? I saw a series of red candles, then suddenly candle, a bullish candle. So the secret I want to teach us this morning is how to trade the bullish candle. How to trade the bullish candle. There are certain things you should watch out for and not just trade like a fool. Because you say bullish candle and just go picked up like a fool. No. I'll be showing us something. Okay. First of all, um there are four things you should consider trading a bullish candle. There are four basic things you should consider trading bullish candle. The first is, wait 1 minute. Okay, yeah. The first is your structure. Okay, since now it's a bullish or sorry, trading an engulfing candle, not a bullish candle. I'm sorry about that. Trading an engulfing candle. There are certain things you should watch out for trading an engulfing candle. So irrespective whether the bullish engulfing or the bearish engulfing, whether the bullish engulfing or the bearish engulfing, there are certain things you should watch out for. Okay. Like I said, there are four things you should watch out for when trading the engulfing candle. The first is you should identify your structure. Is it an uptrend or a downtrend? If it's if it was a downtrend and now you can see a reversal or something, then you should know. If it was a downtrend and you can see a reversal heading towards the upside, you should know you're watching out for what? A bullish engulfing. If it's the reverse, let's say it was going up before, it was an uptrend before, and you've seen certain signals that would make it likely reverse, then you should know you're trading a bearish engulfing. Let's say at this point, here, I saw the first doji. This is an uptrend, obviously. I saw the first doji, the second doji. Then I should be watching out for what? A bearish engulfing candle, right? If I'm trading the engulfing candle, or if the engulfing candle pops up, what makes me certain that it is a valid engulfing candle? So this is what we want to watch out for. This is what we want to check for today. So I told you there are four things to check for. First, the market structure. This was an uptrend. I've seen two dojis already. I've seen 2 dojis already. Then I should be watching out for. Then let's say I don't see this engulfing candle popping out, or this engulfing, it closed with this engulfing candle. Then what am I watching out for? First, I've seen my area of value, it was an uptrend. I've seen my structure rather, it was an uptrend, and now a bearish engulfing candle. So probably it might likely be a reversal. I don't know yet. Then that's when you should head for the second. The second. So our second now is the area of value. What do I mean by my area of value? That is my supply and demand zone. I thought it was the supply and demand zone. The supply zone, which is your resistance zone, and the demand zone, which is your support zone. So I'll be using this as an example. Let's say I saw this the first time, second time, then I drew my zone already. The third time, the fourth time, and then it came back to this very point again, and then I saw a bullish candle. Number one, this has satisfied two. This has satisfied. So the second thing you're watching. So the second thing you're watching out for, which is your area of value, that is your support and resistance region. Your support and resistance region. So that is our area of value, and I've thought of as our supply and demand zone. So this thing has this very bullish candle, this bullish engulfing candle, not just a bullish candle. This bullish engulfing candle has satisfied that condition. First, it is a bullish candle. It is a bullish candle. It has satisfied that of the market structure. That is, it was formerly a downtrend. A doji popped up and it formed a bullish candle. So it was a downtrend and I saw a doji. That is the first one has been satisfied market structure. That is, it is now the doji came up and I would be suspecting what? I would be suspecting a reversal. The doji came up, so it has satisfied that condition. It was a downtrend, the doji came up, so I was expecting a reversal because I saw a doji, number one. Secondly, area of value. This is lying on a very strong support zone. It came up on a very, very strong support zone. Look, it came up on a very, very, very strong support zone. So now what is the third condition? My entry trigger. That is, when do I now enter this trade? I would enter immediately it closes. You know, when it starts forming, I won't know it is trying to form a bullish candle. Let me zoom in. When it was trying to form here, I won't know it was trying to form a bullish engulfing candle. You can see the same conditions were met here. The same conditions were met here. Okay, you can see the same condition was met here. Doji came up and bullish engulfing. Not really a bullish engulfing though. But let's take it that way. And this is like a three. Okay, let's not go there. Let's not go there. Then bullish engulfing came up. So when am I entering? When should I enter this trade? I would be entering at this point. Immediately closes up and the second candle popped up. I would enter here. Where should my stop loss be? Where should my stop loss be? This is a daily chart. So for those having very, very small capital, it is not advisable to pick this trade because you'd have been entering late if you were trading based on this bullish candle. But if you're combining other strategies to it, you would have gotten a quick entry probably around here, and the stop loss would have been here under your zone, not under the candle. If you are trading the bullish, your stop loss, if you are considering the bullish candle alone, your stop loss might have been around this area, around this area, around this area. But now, if because I won't be teaching you how to trade the bullish alone. You should put in other parameters. I told you not to just watch out for one thing. You should put in other, you should consider other parameters. I would be placing my stop loss here. I'm placing my stop loss here. Why am I placing my stop loss here? This is a zone. If at all this candle reverses and breaks below this point, then I should know I think this zone is changing. This is no more a zone because there is enough space. Other candles are within this box. And now this one is just coming to break below this line. So it is completely violating that low. Then where should my take profit be? I'll show us how to take profits later and how to ride along with the trend using Fibonacci. I would be explaining that later, but for now, I'm just showing us how to take trades on based on the bullish candle. So my take profit will be here around this region. Around this region, I can call it my first take profit. Then when I saw this reversal with this candle, you can see it reversed back to that zone. I would have taken another trade. Let's say it hit my take profit here. It went up and reversed. I saw this, a bullish candle again. I would have entered another trade and ride the market up. So I hope you understand. The first thing you should watch out for is the market structure. What is the market seeing at that moment? This market was falling here and doji popped up. It started here, but it's failed to respect this region due to stop hunt. I've taught us what stop hunt is. It came down, that is the big guys in market. It came down and respected this zone eventually. Let's say those are entered here and had their stop loss around here, it would have taken them out and eventually reverse and go in their direction, in their predicted direction. So what happened here? The big guys took the market down, stop hunt, and now a bullish candle is popping up your area of value now. First, it respected the first low market structure, a doji popped up and a bullish engulfing candle. Secondly, your area, your what's it called? Your area of value, the support zone, the support zone, the support zone, your demand zone. It met that condition. Now I'll be thinking of where to go, where to set my stop loss and my take profits, my exit point, my entry point first. This would be my entry point. After the close of the bullish candle would be my entry point. My stop loss would be under the bullish candle. My stop loss would be under the bullish candle for those trading just the bullish engulfing candle. But for we who are combining strategies, our stop loss would be around here. This is not advisable for those trading with little money because this is a daily time frame and it is way above your entry point. So let's say you're trading a lower time frame. I'm just showing us this from the daily. This would have happened under 15 minutes, 1 hour. Then it is cool. It's very okay if you should put your stop loss here. But those trading with very small capital, this is not advisable for you. Only if you are trading on a lower time frame. So I would have placed my stop loss here, my take profit here. But once I saw this reversal, I would have entered because it rested here and started going up. Under a lower time frame, this would have formed another trend, a downtrend, and then I would have seen a break in structure, a retest, and a continuation. Let's even try and see. Let's see what that would show us under. Let's see the 4 hour. Let's see what this would have given us under the 4 hour. I want to look at this very point, so I'll be changing my color to, let's say, black. No, let's say white, so I'll spot it easily. I'm interested in seeing just this red candle and the bullish candle. So let me change this to H4 for 4 hours. If you change your candle and it's still not clear, you should pick. You should go lower. Let's say you're looking for the structure and it's you're looking for a structure and it's really not clear with the time frame you should go to a lower time frame. If the structure is not clear on a particular time frame, I've told us before, the top to down analysis, If it's not clear on a particular time frame, you should go to a lower time frame. So you can see what I'm talking about this at this very point, but it's still not very clear. I would go to H1. Although 4-hour time frame is like the most stable time frame. That is where I love doing my analysis from, basically. So from the 1 hour, I want to consider this zone. Okay, this was the area we're talking about. So I'll be removing the white stuff now. So you can see it got to this point, our TP, it rose up and then it reversed a little. So once I saw, you can see this place is a support zone. Let me draw a ray there or something, a horizontal ray. You can see it's ranged along this line first. It came here, touched here, touched here, touched here. Then I would be suspecting something, and then it came here. It formed two dojis, a bullish engulfing candle, and it continues. So I would have taken another entry here. I would have placed my stop loss, probably since this is 1 hour. It's still fair. I would have placed my stop loss under here, and I would ride the trend along. I would ride the trend along. So I hope you understand this. Trading the bullish or the bearish engulfing candle, trading the engulfing candle. Give us 4 things to watch out for: your market structure first, your area of value secondly, your third is your entry point, and your fourth is your exit point. So now I want to show us a quick and a very small secret to watch out for. This is still more like candlestick analysis. When you see a bullish candle, what are you expecting to see? Let's say I'm trading from daily and you cite a bullish candle, or let's say let's say I'm trading from 4-hour time frame and I cite a bullish candle. How do I know this bullish candle is valid? How do I know this bullish candle is valid? Let's say you did your analysis from the 4 hours and then the bullish candle popped up. So how do I know this bullish candle is valid? How do I know I'm not being deceived by the market players or something, or if it's going to stand at all? So I'll be showing us something. I'm showing us something now. Let's say you have this under your 4 hour. This can be under any time frame. I'm just using the 4 hour. It can be under 15 minutes or whatever. So there are two time frames you'll be putting into consideration here. Let's say you have the bullish candle like this. This can be from any time frame, please note. This can be from any time frame. Let's call this okay, let's even call this 1 hour time frame, H1. So you do not get confused. Let's call this H1. This very one is H1. This very one too is H1. You're doing your analysis from, let's say, the 1 hour time frame, and then saw a bullish candle. How do I know this is okay? For the sake of those, I'll be using MetaTrader 5. We do not have the 2 hour time frame, so let me change this to H4. Those I'll be doing the analysis from okay, let me change this to H30. Those I'll be doing the analysis from Trading View can always use this. You can always use the H1 or whatever. For those I'll be doing the analysis from a lower time frame, from MetaTrader rather. You can't have this. Okay, for the sake of those that would be doing their analysis from the MetaTrader app, we do not have the H2. And I want to make reference to two different time frames. So how do I know this bullish engulfing candle is valid? This would be red. This would be red. Okay. Now you see this popping up under your 30 minutes. You've done your analysis. How do I know this is valid? How do I know this would stand? If you cite this under 30 minutes time frame, you should go and look at the next higher time frame, a combination of both. 30 minutes plus 30 minutes, that is 1 hour. You go to your 1 hour time frame, something must show at the end of that bullish candle. Let's say this 30 minutes, another 30 minutes, and it has closed, not when it is still running, and it has closed. 30 minutes has closed. The first 30 minutes has closed, the second 30 minutes has closed. Not when the second 30 minutes is running. No, the 1 hour will still obviously be running. But your 30 minutes has closed, the first 30 minutes has closed, the second 30 minutes has closed. Then what should I be expecting to see? I would go to my 1 hour time frame, 30 minutes plus 30 minutes, 1 hour. I should see something like this for me. Like a subtraction of the smaller one from the bigger one. This is what I mean. You would come here. You do not necessarily have to draw these lines, though. I'm just drawing this to show us something. I'm just drawing this to show us something. You see this under the 30 minutes, you should be expecting to see, when you say bullish engulfing, you should be expecting to see something like a hammer or a doji under your 1 hour. I would come again. If you see this under your 30 minutes, if you see a bullish engulfing candle under your 30 minutes or another lower time frame, if you see it under your 1 hour, then you should expect to see a hammer on your 2 hours. If you should see it under your daily, you should expecting to see a hammer under your D2, that is this 2 daily time frame. Like a subtraction of this from this. It started with this, the smaller one, and this covered up. So now this will be H1. This would be H1. But with a blue, since it's engulfing the previous one, this should be blue. Or even whichever color it pops up, depending on the previous 1 hour candle. But once you spot a bullish engulfing candle, this is the 30 minutes. The first 30 minutes closed, the second 30 minutes closed. Then you should go to your 1 hour. You must see something like this. If you do not see this, then this is not valid. This is not valid. This is not valid. I hope you understand this. If you spot this, let's say this is 1 hour, this is another 1 hour, then come to your trading view, do your analysis. You should see this under the H2. If you should see this as 4 hours closed, another 4 hours closed, go to your 8 hour under your trading view. You should see this. You should see this under your 8 hour time frame. You might not find this secret anywhere in a book. So I hope you write this down. I never read this particular stuff from a book, but I got it from a source. I never read it from any book, but I got it from a source, not even in a video. I hope you value this. Okay, let's see if we can see one practical example. Let's say this, for instance. I would go to my 2 days time. Oh, there's no 2 days. Let's see if you can see something like this on um, let's say H1, 1 hour time frame. If we can see something like this, I'm looking for a perfect setup that would show us that. Okay, let's take a look at this. This would not show it perfectly because it's not completely engulfing it. Looking for a perfect one. Let's start with this and see what it will give us. I'm looking for a perfect engulfing. Considering just these two candles, just the pattern I showed us, we want to see how valid it will be under our 2 hours time frame. So we'll go and look for that rectangle I drew here under the 2 hours. Let's look for it. Let me mount. Okay. Can you see what I was explaining? Can you see this? Look, this was this was the two candle we highlighted on the 1 hour. Come and see what is showing us under the 2 hours. This is a hammer. This is a hammer. This is a hammer. So when you see an engulfing candle under an engulfing candle, like let's say 1 hour, 1 hour candles, one bearish and one bullish engulfing, you should expect to see a hammer like this. And vice versa for the other way. Let's say it's now a bearish engulfing candle. You should be expecting to see a hanging man or a shooting star. A hanging man or a shooting star, not a morning star. A hanging man or a shooting star, not a morning star. So you can see this is just a practical example of what I explained. When you see that coming up, then you should expect to see this on the higher time frame. That is, if you are working with your 30 minutes, you should expect to see this on the 1 hour. I'm not telling you to go to the 2 hours, no, on your 1 hour. If you're working with 1 hour, you should expect to see this under your 2 hour time frame. If you're working with the 2 hours time frame, you should expect to see this under your H4. So you do not think I framed this up. Let's look for something else. I can see one engulfing here. I'll be using this as an example. This is another bullish engulfing. So I'll be highlighting just the two candles. So under my H4, I'll be expecting to see it as one candle. I'll be expecting to see it as one candle. Let's delete this previous one so do not mistake it. So I'll go to my H4 now. So I'm expecting to see what I highlighted as a single candle under my H4. It's really not okay. The candle is in between here. It can't show us much. It's in between. This is like half of this and another half of this. It won't show us much. This came up like, this is not a hammer. This is not a hammer. It won't show us much. Let's look for something else. So this is what I mean by it was in between. It was in between this candle and this other candle. So this is half of this and half of another one. So it's showing us half of the first 4 hours and half of the second 4 hours. Let's look for something else. Let's see this. Let's see this. I hope this does not fall into halves. So I'm watching out for just the two candles under my 4 hours. Let's zoom out. Okay. Look at this, forming just exactly like a hammer, although the wick is very short. Let me delete. I'm referring to this very candle. See, it's forming something like a hammer, but the wick was very short. This was a downtrend, and this came up, like a hammer, but with a very short wick. Let's look for another one. Let's go to our 2 hours or our 1 hour to look for another one. I'm looking for an engulfing candle. Well, let's use another chart. Let's use one of our favorite charts, the Euro USD. Okay. Okay, let's do for the bearish now. We've been looking at the bullish engulfing. Let's check out for the bearish. This is a bearish engulfing. So I'm interested in seeing just these two candles. Since this is our reference time frame here now is 1 hour, I want to check under the 2 hours to see. You can still see this. Let me delete this. You can still see this forming more like a hammer, but the wick is still very short because it was not completely bullish. We can see this forming exactly like a hammer, although with a short wick above. Let's go back to our 1 hour. This was why it had wicks above, because these two guys had wicks above as well, and it had wicks below. If you should see a completely engulfing candle that engulfs both the former. Okay, we made reference to this. I need a complete bullish candle. This would show something similar, but the body would be very long. The body will start from here. If you have to subtract this from this, the body will start from here above and with a little bit below. If you subtract this candle from this, you would have something around here with the body upwards this way, and the wick would be starting from here below. So this is just candlestick anatomy, understanding the candlestick and not just trading like a fool in the market. This would show almost the same thing under the 2 hour time frame, because this covered it up having wicks above and wicks below. If you are to subtract this candle from this, you would still have this part and this part, and this part. I just want you to understand candlesticks very well and not just see them like random stuff. if I'm to subtract this candle from this candle, I would have something like this with something above it, looking like a hammer, but with a very small wick. Let's see, so you understand what I'm talking about. Let's go to our 2 hours time frame to look for that. Okay, here it is. Oh, it fell in between. It fell in between 2 hours candle, so you might not see it. You might not see that. It fell in between these two guys. As 1 hour here, and this is a 2 hour. So these two candles portraying 1 hour on this side, another hour on this side. So the hours we're talking about is in between here and here. In between here and here. We can still see this like a hammer with a wick, although with a big body. So I won't call it an hammer, but just in that order. I just hope you understand this. We are not online to ask questions, so I can't attend to any now. But if at all you have a question on this very video, just feel free to let me know and get back to me. So I'll be ending the class here for today, and I'll be dropping the link as usual. Bye, guys. Cheers.